You did an interview last year with Wild About, and you said that your current company, Embargo, turns paper loyalty cards into powerful data and marketing tools, which I thought was a really great way of describing what you do, basically. To help build this business, you raised about $1 million for investors?
A little bit more in the end, but yeah, correct,
okay.
yeah.
So a lot of founders that I speak to, that I've invested in, they really struggle to raise capital and get, $1 million is a lot of money for a new idea and a new business. What advice would you give to people on fundraising based on all the pitches and projections and experiences that you went through?
Yeah, I think just first of all, be prepared that nowadays it's probably been harder to raise than ever. And I think regardless whether you're a first-time founder, second-time founder, or whatever, it's never been more difficult. I actually bumped into a friend of mine who's built a unicorn business, exited from it, and now decided after 2-3 years set up his new company. And throughout all these years after he exited, he had all these VC investors coming to him and say, whatever you set up, I want to give you money. Literally, you would get almost, he showed me a term sheet where it literally said, whatever XYZ, his name, built, literally here's $1 million or $2 million on this valuation, like blindly.
Yeah.
I mean, fair enough, he's an incredible entrepreneur, but he just closed around and he did raise very well on a very high valuation, to be honest, something that a first-time founder in the current environment would really struggle to do. But even he said he never expected it to be so hard. I think it's, the last 1.5 probably years have been the toughest. And so definitely if you now go out to raise, you really have to have this tough mentality where you are okay with the fact that 9 out of 10 people will say no. And very often it really doesn't come down to your business, because you need to put yourself in their shoes, which is probably a lot of their portfolio companies failed in the last couple of years, or they had to rescue them. They also trying to figure out what they do currently. I mean, I know a lot of my friends work in VC at the moment. I met them throughout the journey, and it's very common now, common to hear that a fund that used to make 15, 20 investments a year now makes 2 to 4 investments a year. So it had already been very tough to raise anyway. You'd be that small percentage of startups that gets that money. Now it's even less. So be prepared for this. So that's one thing. So really come with that approach, be enthusiastic, but be ready that most of the conversation will be a no. And I think secondly is don't wait. Don't try to almost think, I'm waiting for this big tier 1 VC that has to come in and then I'll talk to the others. We're in a world where just take on the investment that you find. Do not underestimate. If you're starting a business, I don't know how much you're raising, but don't think this 25K ticket is, let me deal with it later. No. If someone really sees what you see, they want to come in that early, want to put in their money, get that commitment in, and start building up. Sometimes it's all about getting the momentum. You might want to raise, say, 500K for your first round, let's say. You're looking for that lead investor, okay, but if you have a couple of smaller ones who really believe in you and your vision, understand, maybe even smart money investors from your industry, get them together. Maybe you put together 100, 150K before you know it, and it's much easier to go to this lead investor, say, look, I already have these 5 guys on board. That's the experience as well. That's why they believe in me. And that's how you create momentum. So do not underestimate any potential investor. Do not wait for this big ticket to come and solve this.
Yeah. I love what you mentioned about the snowball effect there. It starts really, really slowly. It's really hard to begin. But if you can just get a few on board, it compounds and it gets faster and bigger and easier over time.
Yeah, and I think sometimes people really, I'm a big advocate of angel investors, of investors who really care about your business. And to be honest, it's not that they will be a VC will probably on a monthly basis, sit down with you, ask for some reports, and can certainly help in a big way going forward, help you raise the next round, etc. But what you have the angel investors is that it's a personal investment. They will probably be much faster to open up some networks. They'll have more people who probably regularly talk about you as well. And I think it's they're usually also very patient. I think we live in a world where in the last couple of years that the landscape has changed so much. So it went from pre-pandemic where it was high growth. Then, during the pandemic, suddenly it went like, or even faster growth, even bigger valuation. Like it was pretty much take as much money as possible and grow as fast as possible. Like don't even look around. I just want you to literally burn it all, grow, and we raise again. And then almost overnight, it went like, oh no, extend your runway. Try to find, break even profitability. It's almost gone like from A to Z overnight
Completely
in terms of
flipped.
focus.
Yeah.
And now the problem is that if you as a founder find yourself in this sort of game where you almost do what this one or two investors tell you to do, you stop trying to think what's best for your business. And sometimes the long-term value is not necessarily what they think, because they also have a KPI. They want to get their money back within a couple of years. That's the focus. That's the KPIs they need to hit. Which I completely understand why. Their math and their economics are very clear, and there's no doubt why they do this. But it might not always be the right thing for you as a business. So you always need to be, especially now more than ever, really agile to change that and adjust your strategy almost quarter to quarter, 6 months to 6 months. And I think that's why also having angel investors on board gives you that patience usually. And they are fine, because especially if they're ex-entrepreneurs, they've probably gone through that as well. They understand where you are. Yeah.
I love working with investors who have actually built something themselves rather than just money people.
Correct.
Which nothing wrong with that, but it's just, it comes with a different mindset, a different level of value that they add a lot of the time, and all of that good stuff as well.
Correct. Yeah.
So you mentioned around changing, pivoting, adapting a few times there. You had to adapt pretty significantly during COVID, because during the lockdown, that was a big shift for everybody. But for a business which has retail customers as their forefront, it could have killed you. One thing that I heard through the grapevines, which you did, which was really interesting, is that you froze payments for your customers to help build that client loyalty. Now, 99% of entrepreneurs, Freddie, wouldn't have left that money on the table and probably wouldn't have done that. Why did you do that? Can you explain that decision and what that led to? So
first of all, I think we're super early stage. The crazy thing was that we started commercializing, really sort of launched the heart of our product, which is a CRM, and we ultimately are a data engine and a marketing tool and a retention tool for hospitality businesses. What you see on the app side is a very simplified, let's say digital loyalty card that you can use in-store, delivery, pickup, but really the heart is the CRM. So, and we knew we can start charging and commercializing this once we have that CRM element. We believe that a loyalty card itself has no value if it doesn't really help you drive business and feed some data and help you really grow your venture. So we literally launched that, or the first version of it, end of summer 2019. And, it was sort of autumn 2019, and we started getting first paying customers, and then sort of, feel like, okay, we're onto something. We open up our first proper round at that point. We're like, okay, let's raise at least 500-600K. And I think, we started getting some commitment, some momentum there. And obviously then COVID hit, which meant we lost literally almost the entire round, although we had it. So first, actually interesting. We had Brexit obviously was sort of agreed for years, but I think it was when in 2019 in December or end of November, Boris Johnson won the election, and it was pretty much okay, we're going hard Brexit, and we were actually talking to an EU fund at that point, which we were hoping to get an investment. They pulled out as well. They said they're pulling out of UK investments for a while until they see what happens. So we first lost that key ticket. We managed to find a replacement for that. We felt like, okay, we still got the money. We're going for it. The closing was, I believe, beginning of March 2020. Then obviously everything shut down. Now, at that point, I think because we were quite early stage, the revenues weren't that big, that it was either I'm going to basically lose those customers eventually, because I think they were shut down. Like there's very little they could do, and I think there was so much uncertainty, stress, and panic that I had to. We all sat down and we had to make a decision and think, okay, in the long term, we really believed this will be something that will push those businesses to understand that data is key. That having if you make all of your money from your consumers, you should probably know who they are, have a way to communicate with them, realize when they stop coming. If you reopen your shop, have a tool to invite them back, retain them. Like these things are obvious. They had been obvious for retailers, for the Tesco, Sainsbury's, for the, Hiltons, but not so much for hospitality. So we thought in the long term, this whole situation will actually put them in like, make them face that challenge and face certain mistakes they could have made, and we can come as a partner. So I thought, do we now try to squeeze every penny, which probably would not be so significant anyway, but again, I didn't want to just try to squeeze every penny and make a couple of investors happy. Oh, I can show we still have revenue. Or do I think long term? And I say, look, if we now really support these businesses in this, the darkest moment, and really come, look, we're here to help. We're here to support you throughout the time. So you can build that customer base who still comes to you for that takeaway coffee, takeaway food, even throughout the pandemic. And then when you finally can reopen, use that data to sort of really not just survive, but thrive post out. Because I said eventually it will have to reopen. I mean, that was my bet at least, right? And I think then more than ever, you'll appreciate that database you build, that low customer base that you build on the platform. So we wanted to be there in the darkest moments. So we support, and to be honest, we built our business to generally support any size businesses in that industry, because we really felt they had never had proper tools who are not just a little nice to have, tech solution, but something that can really empower the business and their teams. And so we were like, if that's our mission, then now is the time to show it. We adjusted the product a lot. We put a lot of focus on quick service venues, coffee shops, bakeries, lunch places. Well, because they were the only ones open still for takeaway. I mean, open, close. But we also realized that that's where that community and retention is the biggest, has the biggest impact. Because if you are like a high-end cocktail bar or a nightclub, in all honesty, your loyalty is built maybe throughout the year. If you have a local lunch place or a coffee shop, let's say, here next to office, Hermanos is one of our customers. There's a couple actually we work with here. For them, that loyalty is almost on a daily basis. So that's where this tool, like you can see the power of it within a couple of weeks. So we really shifted to that. I remember I invested in like an e-scooter. I was just scooting around London, speaking to venues which are still open for takeaway, trying to support. And I just went, look, either we just wait for something to happen, or we just go out there and do what our mission is all about, which is supporting those businesses. So I spent the entire pandemic just scooting around London and trying to help. Obviously, all within whatever was allowed to. If you couldn't really leave, there were times where you were almost not allowed to leave your flat. Obviously, I couldn't do much. But whenever there was at least this optionality to go, let's say, to a grocery store, I would literally scoot to maybe a grocery store a little bit further, right, without taking the public transport, and try to speak to those venues around,
It's funny, really, like the founder of a loyalty app which helps businesses get more loyalty from their customers was doing pretty wild things to build more loyalty with your own clientele as well. But, it clearly worked, and you supported those businesses throughout that pandemic period, and in many of them obviously still now working with you and continuing to help you thrive, really. So
I think it also established something in our team where we really build this sort of culture of like, we're here to help, we're here to support, we want to educate. Even if some customers hadn't signed up back then, a few others ended up turning around and signing up with us even last year, and they still remember where we were reaching out back then. And I think education, at the end of the day, we want to show that, loyalty, active customer management, using the power of data to boost your sales and revenues and retention is such a big subject, but can actually be implemented in an easy way. And this is what we always say. It's like, the loyalty card is just that hook, is something simple to use for the like your regulars and members of staff. But what we provide is something much bigger. It's this, today, it's a digital tool which captures your in-store transactions, like customers. You can use it to order, click and collect, delivery, staff tipping. We can integrate with your POS system. We can provide you all your sort of data marketing suite to actually, for the first time, go as a business. I have X amount of regulars. 20% have not been back for a while. Oh, they used to visit me every 2 weeks. Now they visit me every week. So clearly I've been doing something right. You can almost, even if you're an entrepreneur in that space, which has no technical background or no digital background or is super overloaded, they can literally spend 5-10 minutes a month and do more marketing, communication, and active relationship building with those customers than they've ever done before. Because I think a lot of those entrepreneurs realize that just providing a good product in a nice location and then hoping everything else works is probably not enough, right? You need to do what the grocery stores or the airlines or the hotels had been doing for years, which is building that relationship beyond the, hey, how you doing in store. Yeah.